This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Top oil exporters Saudi Arabia and Russia confirmed on Sunday they would continue with their additional voluntary oil output cuts until the end of the year as concerns over demand and economic growth continue to weigh on crude markets. Both countries said their cuts would be reviewed next month to consider extending, deepening or increasing it. Saudi Arabia confirmed it would continue with its additional voluntary cut of 1 million barrels per day, BPD, translating into a production of around 9 million barrels of oil per day for December, a source at the Ministry of Energy said in a statement. Oil prices edged up on Monday as top exporters Saudi Arabia and Russia said they would stick to extra voluntary oil output cuts until the end of the year, keeping supply tight, while investors watched out for tougher U.S. sanctions on Iranian oil. Brent crude futures rose 35 cents, or 0.41%, to $84.89 a barrel by 0400 GMT, while U.S. West Texas Intermediate crude was at $80.92 a barrel, up 41 cents, or 0.51%. Saudi Arabia confirmed it would continue with its additional voluntary cut of 1 million barrels per day, BPD, in December to keep output at around 9 million barrels of oil per day, a source at the Ministry of Energy said in a statement. The Saudi decision was in line with analysts' expectations.
Moving on to the top news in the energy sector.
U.S. companies have announced plans to build dozens of solar panel factories across the country since last year when President Joe Biden's signature climate law unleashed billions of dollars of subsidies, raising hopes a clean energy boom can provide tens of thousands of good-paying jobs. But global solar panel prices have collapsed due to a wave of new Asian production capacity in recent months, leading many in the U.S. solar industry to worry many of these proposed factories may be uneconomical. Changing market forces have already derailed solar manufacturing operations in Europe. In recent days, the U.S. race for a clean energy transition has already been hit by huge write-downs and project cancellations. The offshore wind industry. Demand for seaborne thermal coal in Asia is starting to pick up ahead of peak winter consumption, but prices are still trending weaker as soft European imports force suppliers to shift destinations for their exports. Lower domestic prices in top importer China are also helping keep seaborne prices subdued as suppliers look to remain competitive in the world's largest producer and consumer of the fuel used mainly to generate electricity. Asia's imports of seaborne thermal coal climbed to 75.77 million metric tons in October from 70.29 million in September, according to data compiled by commodity analysts Kepler. Next, we have the top news in metal markets. China, the world's largest supplier of rare earths, said it would coordinate the exploration, development, utilization and standardized management in the industry, the state broadcaster said on Friday, highlighting the importance Beijing attaches to the strategic mineral resource. China accounted for 70% of global mine production of rare earths in 2022, followed by the United States, Australia, Myanmar and Thailand. United States Geological Survey, USGS, data shows. But dominance in supply of rare earths in the world's second-largest economy has been challenged by continued efforts made by countries outside China to diversify supply chain to reduce dependence on China. Iron ore moved up marginally on Monday as upward momentum aided by healthy fundamentals was partly offset by fears of possible government supervision in top consumer China following the recent price rally and narrowing steel margins. The most traded January iron ore on China's Dalian Commodity Exchange, DCE, added 0.11% to 926 yuan and 50 fen, $127.22, a metric ton, as of 0234 GMT. The benchmark December iron ore on the Singapore Exchange was 0.58% higher at $123.65 a ton, as of 0232 GMT. We will now look at the top news in the agricultural sector. The United Nations Food Agency's World Price Index fell in October to its lowest level in more than 2 years, driven by declines in sugar, cereals, vegetable oils and meat. The Food and Agriculture Organization's price index, which tracks the most globally traded food commodities, averaged 120.6 points in October, down from 121.3 for the previous month, the agency said in a report on Friday. The October reading was the lowest since March 2021.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.